Hello everyone. Today we are going to look into stocks of two companies which contributes to trade and defense sector of India. The first one is Cochin Shipyard, which is into shipbuilding, ship repair, marine engineering training and strategic and advanced solutions. And another is Mazagon, which manufactures naval platforms including frigates, destroyers, missile boats etc., merchant ships and oil sector equipment like offshore platforms and jack-up rigs. CSL started in 1972. It is a large company that produces all types of ships and also undertakes repair and upgrading work on the ships, which in turn extends their life. CSL has built and repaired some of the largest ships for its satisfied customers across the globe. The company has exported around 45 vessels to different clients outside India. It has evolved from building bulk carriers to smaller ships and ships which are more advanced in terms of technology, such as platform supply vessels, anchor handling tug supply vessels. Mazagon Shipbuilders Limited, Mumbai, established in 1774, is one of the major shipyards in India. From being a small dry dock, MDL has grown to become one of the premier shipbuilding companies in the country. Since 1960, it has built 801 vessels, including warships, submarines, cargo passenger ships, and offshore platforms. Now we will come to the fundamental analysis of CSL. We can see on the screen that the current market price of the stock is 1,532. From the extracts of income statement we can see that the sales are not growing consistently for the last 7 to 8 years, but for the last 2 to 3 years and the trailing 12 months, the sales are increasing. Similar trends are for operating margin and profits before tax. If we look at last 2 to 3 years, it looks promising. Now, looking at the balance sheet figures and dividend yields, we can say that the company keeps most of its earnings and have made a huge investment in fixed assets this year, which makes the stock very promising. The cash flow from operations were also increasing till the previous year, but last year it was negative, which is negative sign for the stock as well. We also need to consider the pros and cons mentioned in the screen. Now moving to the fundamentals of Mazagon, we can see that the stock is currently trading at 2,416 and the market cap is also double that of CSL. From the income statement extracts we can see that the sales, operating margin and profit before tax is consistently increasing throughout the years. Also, the operating margin has jumped pretty high in the last 2 to 3 years. From the balance sheet extract, we can see that Mazagon has also done a huge investment this year, which is a positive sign for the company. The operating cash flows are not consistent throughout the period, which is not a good sign, but for the last 2 years net cash flow is pretty huge. We also need to consider the pros and cons mentioned in the screen. As both the stocks comes under same sector, we can do a peer comparison to analyze them. From here we can see that return on capital employed is very high for Mazagon than industry median as well as CSL. Operating profit margin for both the companies are very similar, with CSL having slightly higher OPM. Return on equity and last 3 years sales growth, too, is very high for Mazagon. Now looking at the valuation ratios, both the stocks have PE lower than industry median, which makes them a little undervalued. Price to book ratio is also very similar to that of industry. These things makes both the stocks fundamentally strong, but Mazagon looks more promising. Now coming to the technical analysis, CSL's stock is showing a candlestick pattern of 3 white soldiers, which is a bull pattern. This means the stock may grow in the near future. Also it is showing a support at around 1,300 and resistance around 1,730. If it crosses 1,750, it may see a huge rally. Mazagon is also showing a bullish pattern, with support around 1,950 and resistance around 2,700. If it crosses 2,700 mark, it may go up to 2,900. This video is just for education purpose and we do not provide any stock recommendations.